Hello, my name is David Morrissey. I live in Salisbury, and I'm a member of the finance team at the Foundation. I want to share a brief highlight from our work over the past couple of years that has resulted in some exciting changes to the way we put Foundation assets to work. We have always invested with managers who offer socially responsible screening options, but we have recently done a comprehensive review of our socially responsible investment pool to invest our charitable assets in a way that is both sustainable for the future and supportive of community needs now. We have more intentionally aligned our investment values with environmental, social, and governance factors in the United Nations Sustainable Development Goals to give us an accessible and more widely used framework for evaluating investments. While we acknowledge that socially responsible investing is iterative, we are committed to continuing to explore all the ways we can evolve in line with ever changing economic and social needs. I am excited to share one major step towards that end. This year, we are moving our discretionary funds, totaling approximately $30 million, out of the long term pool and into the revised socially responsible investment pool. This is an important step in further evaluating the impact that all of our assets have. And when you are part of the Vermont Community Foundation, you are part of this impact. We are proud to offer vehicles for charitable capital that can engage and inspire our donors and fund holders. And our philanthropic advisors are happy to discuss the SR pool option with our fund holders. Thank you.
And I'm pleased to speak with you today about the Foundation's investments and our annual audit results. As David Morrissey just mentioned, the SRI pool has grown from 13 million or 8% of our total assets in 2012 to 54 million in 2019, or 15% of our total assets. And we anticipate the SR pool to grow even more through the end of the year to approximately 20% of our total assets. As of December 31st, 2019, the Foundation's assets under management has grown to 370 million, which are estimated to provide at least 20 million in grant making in 2020. The ability to generate this amount of grant making is the result of strong long-term investment performance combined with generous donations to the Foundation from donors that want to improve the lives of Vermonters and the communities they live in. Whether the assets are invested in the SR pool or the long-term investment pool, in order to have impact, that is, to have resources to make grants, these assets need to generate strong long-term investment returns. The strength of our investment returns over the long term is adhering to the investment policy and through the collaborative oversight by our investment committee, our independent third-party investment consultant, Colonial Consulting, and the VCF staff. Our investment philosophy is based on preserving the purchasing power through earning investment returns sufficient enough to support grant making and the inflation rate. As of July 31st, 2020, the socially responsible pool has met its investment benchmark since its inception in 2006, and has also met or is in striking distance of the benchmark for the 1, 3, 7, and 10-year periods. Though the pool was retooled in 2018 to align more proactively with the VCF's values framework, we will continue to review and enhance the alignment of the investment managers for continued impact of this investment pool. The Foundation's long-term pool implemented the current investment philosophy in June of 2002. And since this time, the long-term investment pool has generated 7.4% per year net of investment management fees, while its benchmark returned 6.2. This translates to a 260% cumulative return, while the benchmark returned 195%. In addition to generating these strong results, returns have been very consistent over the years as the long-term pool has outperformed its benchmark in 77% of the one-year comparisons and 95% of the rolling three-year comparisons. Nevertheless, the long-term portfolio generated very weak returns to begin 2020 with a loss of 19% through the first quarter of 2020, an outcome that was 6% behind the benchmark. The long-term pool has recovered some since then, and from April 1st through the market close of September 11th, the long-term pool has gained 19.6%, while the benchmark has gained 16.9%. Though this recent performance is positive, it still leaves the portfolio down just over 3% year to date and still nearly 4% behind its benchmark. We are pleased to have this large recovery from just 6 months ago, but there is still more progress to be made. We have spent a considerable amount of time reviewing the portfolio and the results with Colonial Consulting, and that despite a simply terrible start to the year, as of our current analysis, we do not believe that the portfolio was fundamentally flawed. Instead, we believe the portfolio simply was not well suited for a complete market panic and meltdown. Our investment philosophy focuses on long-term investment horizon, and the results we quite purposely do not try to predict short-term events, nor do we believe that the portfolio must do well in a market panic. We avoid ideas as they almost always amount to constantly buying insurance, which lowers long-term returns. As we reviewed the portfolio, we see little reason to make any significant changes at this time. With history as our guide, conditions like we have seen in 2020 create incredibly strong investment opportunities for patient investors such as the Foundation. Colonial has indicated to us that they have rarely seen such large levels of embedded return and outperformance being offered by markets. It is interesting to note that the 20% gain I mentioned earlier only reflects a modest portion of this opportunity, as markets are still in a very unhealthy state, as they are dominated by just a few large, exceedingly popular stocks like Apple and Amazon. This has left a very large number of other investments that will power future returns for the portfolio. Despite a year that has been incredibly difficult on so many levels, we are optimistic with the recent long-term returns generated by all of our investment pools, and even more so about the future prospects for them as well. Out of this difficult year with its dysfunctional markets, there are seeds of a performance recovery that we believe will support philanthropy in Vermont, just as has been the case nearly 20 years with this strategy. Turning from our investments to our financial performance, we have our investment, in addition to the oversight of our investments, our finance team is driven to ensure the assets entrusted to us are deployed as our fund holders intended. Our team focuses on strong financial controls and policies and procedures that follow Community Foundation best practices. For the most recent audit period ending December 31st, 2019, the Foundation continued to receive a clean audit opinion from our independent auditors. This means that based on the work performed by the independent auditors, the financial statements are accurate, complete, and in accordance with generally accepted accounting principles. Further, the Foundation continues to achieve the designation of an accredited community foundation as issued by the national standards for U.S. community foundations. We are proud of these achievements and are motivated to continue to steward the assets entrusted to us. Thank you.